Hey everybody, so here's number 5 from the quiz access for chapter 4. Uh, Again, we had a few people ask about it, so I thought I'd put out a video. So here we go. Allied Merchandisers is organized on May 1st. Macy Company is a major customer or buyer of Allied's products. So let's see. We have Allied making a purchase, we have Ally selling, Macy returning, etc. So again, we want to figure out, first of all, when we do these types of problems, what kind of like, who am I in this? And so it looks like I am Allied, so I'm making we're doing the recording the journal entries or the transactions for Allied. So in these cases, I'm acting as the seller, right? I'm selling stuff. Although it looks like I also have a purchase. So in this case, I can be both. And so we just have to know for each transaction then, well, what am I? Am I a purchaser or am I a seller? Because that's going to impact the nature of the entries we're making. So let's go ahead and do our journal entries. The first one is, and I think, what else do we need to know here? A perpetual system. So that means we're going to record things straight to our merchandise inventory account. And then we use the gross method so that if we get a discount or when we record a purchase entry, we are going to record the full amount, even though we might take the discount later. And if we do that, we'll have to do an entry for the discount. All right. So first transaction, we make a purchase on May 3rd for 2,000 units at a price of $7 cash per unit. So this one's cash. So we're going to record a debit to our merchandise inventory account. So that asset merchandise inventory is going up by 14,000. And then our cash is going down. So that's pretty easy in the sense that, there's nothing real complicated happening there. We are paying cash asset out and receiving merchandise inventory asset in. I'll go ahead and record that entry. On number 2, we sold 1,000 units of the inventory for $11 per unit to Macy under credit terms of 210 net 60. So I think what they want us to enter here is both sides of this. Remember, when we sell something, we have to enter both our cost and then the amount the customer pays us. So typically the way we do that is we do one journal entry for what the customer pays us. Was it cash? What did it say? No, it's accounts receivable of $11,000. So that means the customer owes us. And then our revenue probably be something like sales, just sales. That's what they call it on this one. Sometimes they'll say sales revenue. So that's for the amount the customer paid us. And then we do another entry. This is where I'm a little confused, I guess, about what. Oh, see, okay, they do want us to do the cost of goods sold separately. So here we're just going to enter the amount that the customer owes us and the revenue. And then on the next entry, we'll record the cost of goods sold on that sale. So remember, on that sale, we sold 11 units. We sold 1,000 units. So remember, our cost per unit was $7. So if we sold 1,000 units, 7 times 1,000 was 7,000. So the expense is going to be cost of goods sold, 7,000. And then merchandise inventory is going down by 7,000. So pretty easy once you figure out that every time we do a sales transaction, we have two things happening. We have either cash or accounts receivable going up, depending on if they pay us cash or promise to pay us later, by 11,000, or by the amount that of what we sold it to the customer for, and our revenue going up by that same amount. And then we also have our expense for what the merchandise cost us going up, and our merchandise inventory going down. So there's always those two entries for each sale. All right. On the 4th, Macy returns 100 units because they did not fit the customer's needs. So they're returning these to us. And so what that means is they're not they're not broken or something like that. So we don't have to worry about it. We can just put them back into our inventory so we can sell them again. So in essence, what we're going to do is we're going to add them back into our merchandise inventory. And then we're going to reduce the amount the customer owes us, $1,100. Let's see. And now we're going to also, oh, you know what? So that's a good point. So actually, that was a mistake on my part. I wouldn't want to do merchandise inventory here. I would want to do sales revenue or just sales, because this is at the amount that the customer paid for them. Okay. If I did merchandise inventory, I'd be showing this inventory coming back in, but at the sales price to the customer, not at my cost. So the first entry here is going to be a debit to sales and a credit to accounts receivable, the first entry on this return. Okay. So then when I go to this one, now I want to record this at the cost, which is going to be, I'm going to debit merchandise inventory. So increase that account by 700. And I'm going to reduce my cost of goods sold. Why? Because I didn't sell them, right? I have them back in my account. So on the number 6, Macy discovers that 100 units are scuffed but are still of use and therefore keeps the units. Allied gives a price reduction or an allowance to credit Macy's accounts receivable for $300 to compensate for the damage. So again, we're going to say, okay, our accounts receivable is going to go down by 300 because we're saying Macy doesn't owe us this money anymore. And then here, we're going to show that our, make sure, I might mess this one up, guys. So don't worry. If we do, we'll fix it with our check. But I think we are going to record this to our, I don't know. We'll have to see. I'm going to put sales returns and allowances, but we'll see if I screwed that one up. All right, finally, Allied receives payment from Macy for the amount owed on the May 5th purchase. So the payment is net of returns and allowances and any cash discount. So we're going to ask ourselves, okay, if they made the original sale on May 5th, and now these guys are paying on May 15th, are they within the discount period? And they are. Okay, so it's a 2% discount if they pay within 10 days. Then our second question is, how much do they owe us at this point? So we can look back at our transactions, right, and say, okay, so they did owe us $11,000, but then we gave them back 1,100 for that return, and then we credited them another 300 for the scuffed stuff. So the amount they owe us at this point is 11,000 minus the amount of the return, 1,100, minus the amount of that allowance of 300. They owe us $9,600, and then we're giving them a 2% discount because they paid within the discount period, right? So we'll come here and we'll say our accounts receivable at this point is 9,600. So we know we're going to want to reduce that whole accounts receivable by 9,600. We're going to receive some cash, but the cash is not going to be the full 9,600, right? It's just going to be 9,600 minus 2%. So I'll say times 98% to see how much cash they're actually going to pay us, 9408. And again, I'm a little fuzzy on how they're going to want us to do this. So I'm going to record this as sales discounts and see if that screws me up, which is going to be the 9,800 times 2% for the amount of the discount. There's 196. All right, so here's the moment of truth. I'll use my check and see if I messed it up, which is very likely. All right, so what they didn't want me doing here, is they didn't want me calling this May 7th amount sales. Okay, so let's look back at it. We return 100 units because they did not fit the customer's needs. So they didn't want me taking it off of sales, which, now that I think about that, makes sense. Instead, we're going to call this sales returns and allowances. So that amount is good. And then the sales discounts here, that's a little tougher for me since this has to add up to $9,600. Since we know that's right, and we know that's right. Oh, you know why? It's 192 because I can't do math in my head, apparently. So let's go ahead and correct these. So instead of sales, so we're not taking it directly off sales. That's, now that I think about it, that's kind of obvious. When we are the seller, we don't just debit our sales for a return. Instead, we record it to sales returns and allowances. And then on this last one, apparently I just can't do math. Or, I put 9,800 times 0.02. So 9,600 times 0.02 gives me my 192. We'll record our entry. We'll double check. And that, I put purchases, returns, and allowances instead of sales, returns, and allowances. See, I did that on purpose, just so you guys would know that even the teacher makes mistakes. No, I didn't do it. I just screwed it up. All right, we'll record our entry, and now we should be good to go. There we go, 100%. It only took me all 3 of my checks. So I hope again that was helpful to you. And as always, if you have other questions, don't be afraid to email me or let me know in some other way.